So, it's been a really turbulent week.
My fellow Americans, this is Liberation Day. Starting tomorrow, the United States will implement reciprocal tariffs on other nations.
President Trump's tariffs are one of the most harmful and unnecessary mistakes of the modern era.
It's a fundamental misunderstanding of how global trade works.
This round of tariffs may be 50 times as painful as the ones Donald Trump instituted in his first term.
Global financial markets are tanking again in the wake of US President Donald Trump's sweeping tariffs.
It has been called a Black Monday. Panic has swept through the markets from Mumbai to Tokyo.
China says it will fight to the end against the United States to safeguard its interests.
The era of rules-based globalization and free trade is over. We are entering a new phase, one that is more arbitrary, protectionist, and dangerous.
I'm telling you, these countries are calling us up, kissing my ass. They are dying to make a deal. Please, sir, make a deal. I'll do anything, sir.
And then, just before the tariffs were about to kick in on Wednesday, this happened.
Just literally in the last couple of minutes, we're hearing that President Trump has announced that there will be a 90-day pause on reciprocal tariffs.
Well, I thought that people were jumping a little bit out of line. They were getting yippy, They were getting a little bit yippy, a little bit afraid.
Stock prices soared. The S&P 500 index up nearly 10%. Again, that would be healthy in a year. The tech-heavy NASDAQ having its best day since 2001.
The US president has announced 125% tariff on Chinese goods.
Last heard, China had retaliated with, among other things, a 125% tariff on US goods. So what do we have? A constantly heating trade war between two of the world's most powerful economies, a 3-month relief in other parts of the world. In this episode, I ask the following questions. What made Donald Trump pull back? Is this a temporary relief? In other words, will Trump make good his tariff threats on other countries in the world if deals with them do not fructify? What happens to smaller nations? Is the market bounce back sustainable? How will the Federal Reserve react? And are fears of a US recession allayed for now? Keep listening to today's special evening drop. It's Friday, April 11th. I'm your host, Anirban Chowdhury. This is the Morning Brief. My guest today is Chris Watling. Chris is the founder of Longview Economics, a London-based research firm that has been tracking global markets and economies for more than 2 decades. Chris, very warm welcome to the Morning Brief.
Yeah, morning. Great to be with you. Great to be with you.
For our listeners, Chris and I have been having really long and detailed conversations on basically what's been happening in the US. In the first one, we tried to find context in why Trump had announced these really inflated tariffs on all of US's trading partners. We traced it to interviews and statements and writing that has been emanating from Trump's previous stint in 2017 to 2021 from several government officials, including former Trade Representative Bob Lighthizer, current Trade Advisor Peter Navarro, and of course, Council of Economic Advisors Chair Stephen Mirren in his November 2024 report, A User's Guide to Restructuring the Global Trading System. We'd also spoken about how the tariff policy was rooted in basically the overvaluation of the dollar and its role as a global reserve. That, coupled with the somewhat complex view about the rest of the world just being out to cheat and take advantage of the US.
Basically, they perceive a trade deficit as an indication of America being ripped off or having unfair trade terms or, having lower tariffs than the other country would. So to them, the trade deficit is the scorecard, and that's the sort of beginning and the end of it.
And then, just as we were about to publish that interview, and this is past midnight in India, Trump went ahead and put a pause on tariffs on all the world but China, on which he increased levies to 125%, and then China did the same today. So that interview basically never got published, but here we are in a fresh conversation. And I guess the first question to ask you, Chris, is why? What made Trump do that volte-face?
I suspect it's because of what was happening in the bond market. We saw US 10-year bond yields over the prior two sessions back up very sharply. They had been below a 4% yield, and in a couple of days they moved very sharply to around a 4.30 yield, which is a very big move, particularly as equity markets were struggling. You would have thought people have been buying bonds as a safe haven trade, but quite the reverse. They've been selling bonds, and there's been a lot of chat in markets about what's been driving that. But there's certainly a sense there's some dysfunctionality in the bond market and some concerns that it was brewing into potentially a systemic risk. So I would have thought that people in his administration, people he knows on Wall Street and so on, would have alerted him to the concerns because of that and encouraged him to roll back a bit. So I think that was probably part of it. Maybe he felt that there was enough people, countries queuing up to negotiate as well. I mean, he certainly heard about, I think 75 odd countries queuing up was the number he used to negotiate with the US government and try and do some sort of deal. So perhaps there's that as well. But, I think the immediacy, the concerns, the dysfunctionality of the bond market were definitely front and center, and would have been something that someone like the Treasury Secretary, Scott Bessent, would have been making a lot of noise about in Trump's ear. So I suspect that's the immediate trigger, that and the fact that he'd got to a place where he wanted to be in terms of countries lining up to do deals.
Right. So I was reading somewhere that former US Treasury Secretary Timothy Geithner had said that if there was reincarnation, basically if reincarnation was real, he'd want to come back not as the president or the Pope, but as the bond market, because it can intimidate the most powerful man in the world. Chris, do you want to explain why?
Well, the US 10-year bond is the most important financial market price in the world. In the sense that the whole derivatives construct, or the majority of it, is priced off that. There's a lot of dollar lending in the world, a lot of which is priced off the 10-year. It's the ultimate risk-free rate. And once that starts behaving strangely, it does all sorts of things to people's models. They're sort of models for risk management. If you get much more volatility in bonds, you get dysfunctionality, those risk models start telling them to liquidate positions and do kind of strange things, and you get reverberations throughout the global financial system. So this is the most important price in the financial world, and if it's dysfunctional, the knock-on effects can be multiple. So the risk of systemic risk is the problem there. Whereas equities, it does matter if they go down a lot. They're important, but they're not at the level of importance that you have on a 10-year bond yield.
And like you said, Trump was obviously listening to a very different bunch of people before levying the tariffs and before stalling them.
Yeah, I think, there's definitely two camps. There's Peter Navarro and Stephen Mirren and guys like that, Bob Lighthizer, who are very much going hard on this tariffs issue, and Navarro is at the heart of designing that equation we saw a couple of weeks ago on Liberation Day. And then on the other side, you've got Bessent, who's sort of putting up with it and towing the line, but I don't think believes in it for 1 second. And is a much better markets guy, and Elon Musk is a much more free trade guy. And then you've got people like Ken Langone, who is the chairman of Home Depot, who's a billionaire backer of Trump, been making lots of noises in the last few days about the lack of sense of this policy pushing back. So backers of Trump, I think there'll be a lot of people who've been on the phone saying, come on, this is a bit too much. Wall Street's been making a lot of noise. And so the pain is being felt by those who back Trump and those who are key supporters. And really, I think those voices have been amplified in Trump's ear, if you like. And I was chatting to someone the other day who liked to joke that his billionaire golfing buddies are probably a bit upset with him. So there's been a bit of, different voices having more influence, really. And I think that's part of it, yeah.
Okay, tell me, something that is very clear, especially from his last announcement, is that Trump is playing very different games with China and the rest of the world. In fact, in a newsletter Bloomberg's John Authers, and he's someone I follow very, very closely, said that the US and China were playing the game of chicken, which is basically a term taken from the film Rebel Without a Cause. And this is a game in the film where two characters are driving towards the edge of a cliff, full speed, and whoever swerves first loses. Now, that's the kind of game US and China are playing, according to John Authers. While with the others, he gave the analogy of pure play bullying, which is just ramming into countries that were basically minding their own business, with a lot of threats and noise and downright insults, actually, if you look at some of his recent speeches, basically to psych them into agreeing to do what he wants. How do you see these two different kinds of play?
Yeah, I think this is classic art of the deal, which is sort of, and classic Trump, which is, throw everything at the wall, shock and awe on Liberation Day, surprise everyone, bring them to the table, and treat them all the same initially, allies, non-allies, and so on. But really, the ultimate goal, I think, is to do deals with allies and to put pressure on China. I think all of this goes back to containment of China, which was Trump 1.0. This is exactly what he began in his first term. This is about the hegemon, the rising power challenging the incumbent power in the global geopolitical system and the global economy. This is about China challenging America and America pushing back. And I think we saw that with a sense that Trump is trying to bring Russia in from the cold, if you like, trying to bring them back into the Western orbit and extract them from being a buddy of China's. So I think it's all consistent. So yeah, I don't think he'd be too concerned if China was largely cut out of the global trading system, as far as he's concerned, or cut out of access to the US consumer. So yeah, I would agree with you. There's two groups. There's China and there's everyone else, pretty much.
You said this is classic Trump. Can you give me precedents, previous examples?
I mean, I think, I'm trying to bring them to mind, but I certainly have this sense that that's his normal playbook, and he often actually capitulates at quite low levels. I mean, I think just what he did with Russia and Saudi, and trying to bring Ukrainian peace, it obviously hasn't worked so far, but that was shock and awe to the Europeans, utter shock and awe. Yeah. So there's a history of it. I think Trump 1.0, if I dug deep enough in the mind, we'd find plenty of examples. He often doesn't get that much, but he calls it a win and he's happy and moves on. So yes, it's all entangled in the big picture. But as always with Trump, it's, flood the news wires, project chaos, shock and awe up front, and then see what you can get back, basically.
So as of now, it seems to be a no-brainer that we are looking at a US-China trade war, unless, of course, there is a drastic de-escalation there as well. But what about the other nations? I mean, at the end of the day, Trump is less a statesman and much more a businessman who's trying to basically crack deals. So he has asked Europe to pay $350 billion for US energy. He wants Japan, Taiwan, and South Korea to be part of a $44 billion project that entails the transfer of natural gas from Alaska to the east. What about smaller nations, smaller economies? What's going to happen to them?
Well, it's tough for small nations, isn't it? Because really, you don't have that much negotiating power. I mean, the challenge for Trump is you end up pushing people away from you rather than drawing them in. But I think absolutely. I mean, it's always been the way that you get something in return for that trade deficit. There's some deal, some payment, some from the small nation exporting to the US, and that's what we're seeing. Whether it's energy, payment for security, umbrella, or some other kind of deal. I think all of that is on the table in Trump's mind, and in his mind, he's got to reduce the trade deficits, and he wants something back for them, and he wants to be paid for America's global policeman role over the last several decades. And the smaller you are, the harder it is to come out looking good in this negotiation. That's what we're seeing. It's a very unusual diplomatic style.
What do you think will happen after the 90-day breather on tariffs if things don't go Trump's way? Will he go back to levying those tariffs?
I think the 10% tariff is about raising revenue. He needs some revenue to pay for his tax cuts. I don't think he wants to have tons of tariffs on allies. I think on China, he's probably quite happy to do that. So I suspect he'll just continue to use it as leverage to force the outcome he wants.
Right. Now, let's talk about impact. Investors and traders in the US and many other major markets have been betting on which way the Fed will go on rates. In fact, before Trump made the U-turn, Nouriel Roubini said that there is another game of chicken, just to repeat that analogy, and that's between Trump's put and Federal Reserve Chair Jerome Powell's put. Do you think this latest development from Trump will influence which way the Fed jumps?
Yeah, the market is priced in more rate cuts, and rightly so. I mean, just wind back to the beginning of this year, the consensus on Wall Street was the Fed, could even raise rates this year, which was extraordinary to me at the time. We've had a fiscal tightening in the US. Let's not forget that. Doge has been busy cutting government spending. And at the same time, we've had this disruption from tariffs that has meant a lot of capex is being postponed. A lot of CEOs are a little bit confused and waiting for some clarity. So all of that, I think, feeds into nervousness and a bit of soft patch in the economy and drives this mid-cycle slowdown that should really bring the Fed back to the table. So they're a bit reticent because they're worried about tariffs and what it might do for inflation. But in reality, the tariffs are a tax, and ultimately they're deflationary, they're negative for growth. That's their main impact. And so I think, the Fed's going to be cutting, as the market expects, 3 or 4 times this year. And that adds to what's happening in the rest of the world. Everyone is pretty much cutting these days.
Okay, another impact question. The markets have really rebounded. Do you think this is sustainable?
I think, it does slightly depend on what Trump does. But if it's that framework that we just talked about, that really on allies, it was mostly about negotiating, and that's kind of the right characterization, then I think much of the downside's over in equity markets for now. There's definitely a risk of continued volatility. We whoosh up 10% yesterday, we could easily go back to where we were 2 or 3 days ago and have a retest. That wouldn't surprise me. But I suspect a lot of near-term volatility, but I think most of the downside is probably in the price. Yeah, well, the S&P was down 20% plus from peak to trough. That's a big move. And we have a lot of market timing models that are back on suggesting there's been a full washout of risk, a full sort of pullback, if you like, and a repositioning in markets, and suggests they're ready to, at least have some relief rallies. And of course, we started seeing that yesterday. I think the majority of the damage is done. And I think the interesting thing is the shape of global growth is changing. Post-pandemic, we haven't really had a normal cyclical recovery since the pandemic. On a global basis, China's been struggling. The West has had tight money since 2022, and now we're into global rate cuts. So I think as you look forwards 12, 18 months, we've got a global cyclical recovery brewing. So there are points of optimism out there. Of course, the whole world trading system is changing to a degree, but there's a lot of strengths out there as well. So it's been an interesting ride the last couple of months, but I think what this throws up is actually opportunities for long-term investors.
And finally, there are still fears in many quarters of the world of a US recession. You have, in your previous write-ups, allayed those fears. What do you think now?
Yeah, you're right. There's a lot of fear about a US recession out there at the moment. And our view would be that you're going to skirt recession in America. It's probably going to be what we call a mid-cycle slowdown, sort of a growth soft patch. And, the economy's slowing in America because it's got a fiscal tightening. Elon Musk is at work. Doge is doing its thing. It's cutting government spending. And under Biden, fiscal stimulus is a huge part of the growth story. 4 big fiscal packages under Biden. If you looked in 2024, between 60 and 80% of the jobs most months were government-linked jobs. But, America's quite a closed economy. Goods imports are 11.5% of GDP. It's very different from Britain's about 30%, and Germany would be 40 or 50%. Those are much more open economies than America is. India's quite a closed economy in that respect. So, so it's quite protected from this trade war in a sense. I would say the yield curve's already come down a lot. US housing's really geared to 10-year bond yields, and the bond market's been moving. Yields have been falling quite meaningfully in the last couple of months, and that's stimulus. The oil prices are off 10-15%. That's stimulus for the American consumer. And actually, the private sector, the corporates and the households in America, in aggregate, are in pretty good shape. So I think they should respond quite well. So I think we'll probably get away with a recession, and it's just a mid-cycle slowdown. So yeah, lots to focus on. The market's thinking a lot about all this stuff. It is a bit of a moving feast, but that's kind of where we're at the moment.
Chris, thank you so much for joining us on The Morning Brief.
Thank you for having me.
That's it for today. You were listening to this episode on The Morning Brief. It was produced by me and sound designed by Indranil Bhattacharjee. A new episode of TMB drops every Tuesday, Thursday, and Friday, wherever you get your podcasts. And when the news cycle gets too heavy, we come to you more often, like today. Keep listening. All external clips used in this episode belong to their respective owners. Credits are mentioned in the description.